Good morning, everyone, and happy Memorial Day. Welcome to another episode of Sports Card Investing. My name is Tim, and just wanted to go over some different topics in the sports card industry today. Before we get into that, though, I wanted to thank everyone who has served our country or continues to serve our country. Specifically, I want to give a shout out to my good friend Glenn Gonzalez. We grew up together. Went to the same elementary school, kept in touch through all the years, and he actually served in the Army for, I want to say, about 2 decades, did a few tours in the Middle East, and put his life on the line many times for our country. So happy Memorial Day, Glenn. I know you watched the channel, so I appreciate that. And I don't know, maybe one day you'll actually get into card collecting again. So with that said, I do want to talk about the state of the market, which everyone seems to be talking about today. Are we in a bull market? Are we in a bear market? I think these are the things that people are wondering, and we've definitely seen the bull run, and now we're seeing a dip in prices, which some people are saying is a correction. Some people are saying that it looks like the party is over, and we're probably headed for a bear market. And so I like to look at stocks as an analogy to what we might be experiencing right now. And an example would be the dot-com boom and the bull run we experienced there, then the dot-com bust, and then the subsequent bear market. So one of the things that is brought up is the bear trap, and this phenomenon was brought up by Geoff Wilson, who has a YouTube channel called Sports Card Investor. This is a really good episode. If you get a chance to watch it, it was done back in, I want to say, maybe September, during the start of the football season, and he talks about the bear trap. And the reason it came up then is because we saw a similar decline in prices, and we were asking the same questions that we're asking today. And so what the bear trap is during a market like we saw in February, where it's just extremely hot and it just keeps going up and up and up, we have a natural correction in prices. So we see a dip in prices, and what ends up happening is that we're still in a bull market. So after the dip, we'll see the market plateau, and then we'll see prices start to trend back up again. And that's exactly what we saw back in August. We saw a similar spike in prices. Then we saw a similar decline where many of the basketball cards lost approximately half of their value. Then we saw the plateau between October and December, and then we saw prices start to tick back up again. I personally believe we're still in a bear trap, and anyone who's selling off for fear that the party is over and the bull run has ended might be selling prematurely. Now, this is just my opinion. Obviously, nobody knows, but there are some key factors there to show that the demand is still there for the sports card industry. People are just having fun with the hobby in general, especially with this whole vlogging YouTube thing. And I think this is an element that we didn't have, obviously we didn't have it in the 80s and the 90s. And I think it's adding a different component to the hobby that wasn't there before. And I believe it's actually bringing more interest to the hobby than we ever saw, at least from that angle in the 80s and the 90s. So something to think about. So anyway, with this bear trap phenomenon, what ends up happening is the markets, basically people think the market has overheated, that it's overvalued. And so, there's concerns that people think the market, that is overvalued and the bull run has ended, and that basically it's no longer sustainable. So what you see is the market going up and up and up, and then it plateaus, then it starts to go up again. Well, during this dip in prices, a lot of investors begin to run out because they're like, oh my God, the market's crashing. None of this is sustainable. And the key to the bear trap phenomenon is to actually kind of wait it out and see where has the market stabilized and kind of look for the plateau. At that point, then you can make your own decisions on do I want to invest in a particular player? Might this be a good time to buy? And I personally believe the plateau will last longer than it did last year. Last year it lasted about maybe a month and a half, and I believe that it might last longer. And my reason for that is that I think investors or collectors are not going to pour money back into sports cards as quickly as they did last time around, which was just last December. December, January, and then leading up to February. So I believe collectors and investors are going to be more cautious, and rightfully so, and just kind of wait and see, which players, which cards might be good investments, and they might even be thinking more long term as opposed to quick flips. So I think that'll make a lot of collectors happy. I've noticed that people who truly have genuinely collected cards for the last 10 years, maybe even the last 30 years, that never left the hobby, they seem to resent a little bit of people who are just kind of buying and selling and making a quick buck. And so I can understand that as well. So I think we might start to see less quick flips, simply because people aren't going to rush to pour money into the latest thing, and then therefore there just isn't as much money for quick flippers to make a quick buck. So I think we're going to start to see more long-term investments and more solid, investing in more solid players with maybe more of a track record than, say, like a Sekou Doumbouya or Nikhil Alexander-Walker or Kobe White or any of the ultra-modern basketball players that really saw a spike in their prices and then a subsequent crash of those particular players. I would argue those players did crash and probably aren't going to come back to anywhere near the levels they were in January. So that's my 2 cents there. In any case, I just wanted to go over this phenomenon called the bear trap, and I wanted to look at some of the investments that I made on Star Stock, some of my purchases that were made back in February of this year during the peak of the market, and just to see how I did. And this is all potential profit. These cards have not come back from grading, but I did send them out for grading back in February. And I just want to look at their PSA 10, PSA 9 prices to see the potential return on investment, and show that, once again, that Star Stock is actually a really good place to invest and make some money in this industry. So let's go ahead and take a look.